The PSEI and the S&P 500 bounced off their respective support levels last week, and while we are still in a bull market, can we continue to stay that way, especially coming into the final weeks of the US elections? Also, data suggests that the S&P 500 might be headed into a lost decade. Let's discuss. My name is Dan Slim, and welcome to another episode of Monday Market Outlook. So the US now enters into its final weeks coming into the US presidential elections in November 7, with Trump on the spotlight after his heated Bloomberg debate/interview and his shenanigans at McDonald's. I guess these are the kind of chicanery that can get you elected, as Trump has now overtaken Kamala Harris in Wall Street Journal's latest poll. However, in most other polls, the race remains too close to call, as both candidates are running neck and neck, with neither having a significant advantage in votes. On the betting side of things, Trump has a commanding 59.5 average compared to Kamala Harris's 39%. But the market's already starting to price in a Trump trade. What does it look like? A quick look at some of their policies that can affect the US markets. Here, Trump's tax rate cut from 21 to 15% is estimated to have a 4% upside benefit to the S&P 500 companies. And the Trump trade also pricing in more tariffs, as he doubled down on his promise to levy tariffs on all imports in a bid to boost American manufacturing. A move that economists say likely will lead to a resurgence in inflation. So, as a result of the renewed inflation worries, the US 10-year yields continue to go up, even breaking through the 4.2 resistance here. On Friday, 10-year Treasury yields jumped back to 4.24%, affecting the markets. And as a result, the DXY continues to strengthen. The dollar index has rallied back from a low of 100 to 104.5 at one point last week. And of course, with the dollar strengthening, the peso continues to weaken, surging past the 58 resistance here to close the week at 58.56. Last week, the PSEI bounced from a 7-day losing streak to close in the green, up 30 points, led by BPI surging 5%, followed by index heavyweights SM and ICT with modest gains after a big pullback, testing their respective support levels. BDO and SMPH, however, were the worst performers, with Meralco, Monde, and Ali completing the top 5. Now, looking at the PSEI charts, the market finally ended modestly green last Friday, bouncing off of the 7274 support level to end the week back at the 7,300 zone, closing at 7,314. While this is a critical support level, we've been monitoring this level for a long time, the bulls seem to appear hesitant in defending this area. During Friday's trading, the bulls only came in the last 2 hours. So it's possible that the bulls may show stronger support if the market reaches more appealing levels at around the 50-day EMA near the 7,200 mark. Though if that happens, could we confirm a head and shoulders pattern here, which could actually signal a reversal? No? So hopefully the bounce last Friday could be signs of good things to come for the PSEI, as investors could try to continue to move the markets along this range to possibly set up a Santa Claus rally by year end. Now, instead of going through each of the stocks here, let me show you what you can do if you want to generate your own stock list, right? So if you're subscribed to any trading platform, usually they will come up with their own stock list. This is usually going to be a list of around 50 to 100 stocks. So when it's time for you to buy a stock, like let's say you have a 13-month pay or you get a salary, then you have to buy your stock for this month. Which stocks do you pick from those 100 stocks? No? So let me show you how you can narrow this down. So every week, I prepare a cheat sheet for my stock picks, and this list of stock pick for the week, I call this my trends with benefits stock list, right? So of course, the trend is your friend until it bends, and this is a trend with benefits, if that makes sense, right? So what this looks like is that I would list only the stocks that are bullish, either they are on a rally or they are on a pullback, and I would list stocks that are on a range that I can monitor for later. So how this goes is that I will go through each of the stock and just identify if they are bullish, right? Now, question, is AC bullish, right? It's above the moving averages, it's trending upwards, it pulled back, so it's bullish but it's on a pullback, so I'll put this here. What about SM? Is it bullish? Yes, it's going up. While it breached the 20 EMA, it is still holding the trend line here, and it may look like it bounced off from that, so I would say this is also a pullback, right? So we have DMC, it pulled back here below the 100 EMA. I would say this is trading in a range. GT cap, it's bullish, right? It's actually above the trend line here. It's along the 20 EMA. It's consolidating here. So I would say it's a bullish pullback. GT cap. AEV, no, of course, things like this, stocks like this going down, there's no need to look at them, right? So LTG, it went up, pulled back, it's still within the trend line, it's fine. So we can put LTG here and see. AGI, of course not. So let's go to Ali. Okay, this looks like a pullback. It's at the support zone where it can bounce off of. So I will put Ali here. And SMPH, it's in trouble. So I'm not even going to consider this right now. I'll put this in range. RLC, okay, bullish pullback. RLC. How about MEG? Okay, it's on a rally. So I'll put this here. MEG. AREIT, bullish pullback. AREIT. RCR, okay, we have a pullback here. RCR. CREIT, I'll put this here probably. And BDO, it's on a pullback, right? But we have to see if it holds this, because if it breaches the 155 line here, this could be a double top. We have BPI, okay, bullish. BPI. We have Metrobank breaching the trend line and breaching the support here. Let's say it's on a pullback. Let's see. We have Union Bank, of course, not looking good. You can add any stock you like. I will add China Bank as a bullish pullback. We have Apex here, bullish, right? So remember, we did a trade the previous weeks and said this was a bit risky. We put a stop loss here. It did not hit our stop loss, and if you held on to Apex, you would have been rewarded right now. Let's see how it moves this week. OGP, okay, bullish here. OGP. We have here SEC, okay, it's on a bullish pullback, right? Do we check plus? Okay, it's in a range, right? Plus. DNL, it's in a range. Why? Because see, it's moving along this range. DNL. ICT, also moving along this range. ICT. JFC, it went down, is a pullback here. JFC, but I don't like the red candles here, so we'll see. Monde, bullish pullback. Monde. And some of the stocks I'm also looking at. CNPF. Also, we have Pure Gold. Okay, bullish pullback here. So we'll add another column here. P Gold. Okay, AP. Okay, it's in a range here. It broke the trend line here. AP. How about Manila Water? Also in a range. MWC. How about Meralco, bullish pullback here. Okay, we'll add another column here and put Meralco. Here, Globe. Okay, it breached the trend line here, so I'll put this in a range. Telephone also going down. Is it in a range? Converge. Okay, I would say it's in a range for now, right? Right, so now that you have this list, it should be easy for you to filter the stocks that you should buy for that week. Let's create a story around the stocks that you pick. AC, if we look at AC here, it's actually in a resistance zone, but despite the market weakness, see how AC has held on to these levels. It has not pulled back in the same intensity as the other stocks. So this tells me that AC might make a push upwards in the next weeks. So we can actually highlight those things. AC, SM has defended the trend line here. This is a major critical support zone. It is possible that SM bounces off of that given its move last Friday. So I could highlight that as something I wanna check out this week. GT cap also forming a base here. I can highlight that. LTG, it's fine. It even looks like it's ranging. I can even put that here. RLC, Ali, we have to check if Ali is able to hold support at 38 because it can still go down to the 61.8 fib. So maybe not. SMPH, no. RLC, not looking good also. AREIT and RCR could be good picks this week. AREIT and RCR. BDO, not looking good for me. Needs more confirmation. Metrobank, of course, BPI is has already rallied. Metrobank, not looking good also. We'll see if this holds. This is an encouraging doji candle here. And then CNPF also could be a good bounce of this support. CNPF, but you know, CNPF and Pure Gold, I like Pure Gold better. CNPF's PE ratio is around 23 already, and Pure Gold's PE ratio is just 10. So Pure Gold is the much cheaper alternative to CNPF and could have more upside. So I would highlight Pure Gold. So once you have this list, it would be easy to come in on a Monday to have a more focused list on which stocks you want to play around with if you're a trader, or as an investor, which stocks you want to put your money in for that period of time, right? So hopefully that would make stock picking easier for you guys. Now for this week, we hope the PSEI can continue the bounce off of the 7,300 level and continue on to 7,500. So last Friday's close was encouraging, and well, you know, if it fails, we have support 1 and support 2 for more buy the dip opportunities. But remember, at support 2, we still have this bullish trend line that will maintain the uptrend, no? So let's go on to the global markets. The uncertainty over the Federal Reserve's next move shadowed a robust earnings season in full swing. By this week, 80%, right, of the S&P 500 companies will have reported their earnings results for Q3. And of course, the highlight from last week's earnings results was Tesla earnings. Tesla generated record cash flows of 6.3 billion in Q3 and celebrated the sale of their 7 millionth vehicle. The company guidance projects 20 to 30% vehicle growth in 2025, driven by the launch of the sub 30,000 model in the first half. This boosted the stock to its best day in over a decade, rallying almost 20% in the day to lead the Nasdaq and the S&P 500 in the green. So let's look at the S&P 500 charts. The Tesla surge last Thursday led a mixed market, but the S&P 500 was still able to close in the green, rejecting the 20-day EMA support. But as investors brace for the Fed announcement on November 7, and with the rise in 10-year yields, the S&P 500 opened strong but weakened throughout the trading day, closing at 5,810, ending the 6-week win streak of the S&P 500. Now, if we look at the weeklies, we can see the markets continuing to reject dips while managing to close the week in all-time highs in the previous weeks. So currently the market is overextended from the 20-week EMA, and any pullback here either to the 5.7 or the 5.6 should be healthy for the markets. Now, but if we look at the past rallies here, this can actually go on for a long time. If we look at the start of the year, see how this happened from October up to April. For now, the S&P 500 is very bullish, and investors seem to have bought the dip again last week. Moving on to this week, Tesla's earnings surprise has laid the groundwork for 5 other magnificent 8 mega caps reporting this week. We have Alphabet, we have Microsoft, Meta, and Amazon and Apple all reporting in a blockbuster week this week. And the implied volatility here could move the markets. And for the big names here in the S&P 500, remember that the movement of these 5 stocks has been the drivers of the index for the past years. So this kind of market concentration has led to Goldman Sachs releasing these charts, which got everybody talking about this last week. This shows the annualized 10-year S&P 500 returns, and we see here the modeled graph versus the actual data from the 1930s. So historically, we see returns of the S&P 500 fluctuate to as high as 20% during market booms and troughs even below 0% during the Great Depression and the 2008 financial crisis. But from 2014 to 2024, the realized 10-year annualized return stands at 13%, which aligns with the modeled projection. So basically, what this is saying, that Goldman Sachs model here is so accurate that the 2024-2023 period will have a significant decline in the 10-year annualized return to a baseline of 3%, which is significantly lower than 13%. Now, if we are getting a 3% return in the S&P 500 in the next decade, will this be a lost decade for the S&P 500? Now, if economic conditions favor it, we could have a 7%, but the downside could also be only at 1%. So this decline is really brought about by the anticipated slowdown in economic growth, and also the extremely elevated valuations of a handful of stocks in the S&P 500. Now, if we look at the normalized PE ratio of the S&P 500, what happens here is that we get a divergence here in valuation, which tends to drive an expansion into a bull market with a major peak in PE ratio coinciding with a major market top. So this chart suggests a 60-year alternating cycle where valuation expansions and contractions happen, and currently the PE ratio is approaching levels, right, similar to past peaks. And the question here is whether another top is forming, and should we be cautious for a market that may be ripe for a correction if valuations revert to their historical norms. So if we compare the 1960s cycle with the current year, it looks like we should be at the late cycle, and we could peak by the end of 2025, after which the market will have a major correction. Now, the reason why the overall market valuation is elevated is mainly due to these large cap leaders. Now, this chart shows how a few large cap stocks can significantly influence the overall market valuation. Now, in terms of the number of stocks, actually a lot of stocks in the S&P 500 are priced reasonably, 15 to 20. But if we look at the market cap here, the market value of the index is only concentrated on these few companies, particularly in the 30 to 35 range, which accounts for 24.7% of the market. Now, this concentration suggests that while many stocks in the index are trading at moderate levels, the overall market valuation is elevated only because of a handful of stocks, which is why the equal weight has underperformed the aggregate S&P 500 in the last 10 years. Historically, right, the equal weight index should outperform the aggregate index, particularly during periods of market recovery and economic expansion, as indicated here in the peaks of 1980 and the early 2000s. But the last 10 years shows the equal weight index underperforming by 3 percentage points. So this divergence is of course because of the increased market concentration of the Mag 8 stocks. So we have a couple of scenarios that can happen here. Either the small caps catch up or the Mag 8 valuations revert to the mean. And if we look at this chart, we can clearly see the extreme discrepancy of the Mag 8 stocks forward PE to that of the mid and the small cap S&P 400 and S&P 600. Again, either the small caps catch up to the market PE or the Mag 8 reverts to the mean, right? Because guys, this is not normal. If you can see the market prior to 2018, this was not the case. So eventually, what Goldman Sachs is saying is that this discrepancy will correct itself in the next 10 years. So we'll see, right? In the meantime, this week, investors are bracing for more disruption as we enter into a heavy economic numbers week with both the employment and the core PCE numbers on tap. We will get employment numbers, particularly the unemployment rate and the JOLTS openings at the start of the week, and we will also have core PCE on Thursday. So this week will be a shortened trading week for the PSEI. Again, hopefully we bounce off the support levels. The S&P 500 may come into a choppy week as we enter into the final weeks of the US elections. So we'll see who wins, and hopefully the market can recover after a winner is announced. But in the meantime, I hope that you've learned a thing or two from this episode. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.